analyst at Mirae Asset Securities, Sokje, joining us from Seoul. And Sokje's auto picks have returned at least 50% for his clients so far. Okay, Sokje, nice to see you on this Monday. Let me just first ask you, as you heard there, 23% gains for February U.S. sales for Hyundai, again leveraging off Toyota's woes. But do you think they've been impressive in that regard? Because we have Ford gaining 40%, GM doing pretty well as well.
Yes, they both did pretty well, but their performances are not that significant compared with their previous performances back to 2009. So in that respect, their performance seems to be small, and the gaining seems to be small. But I would say that the real gaining story is like to come from the second half of this year, not for now.
Okay, so if they're going to come in the second half of this year,
we need to consider that.
Go on.
Right, and the key drivers will be on new product like Sonata and new SUVs. These are the volume product to be launched.
Okay, that's why you still have a buy call on Hyundai then, if you're looking for most of the gains in the second half. In fact, you're looking at upside for the stock of 22%. Is that right, Sokje, to 141,000 won? I guess people are curious what's going to drive earnings going forward.
Yes, key drivers for these stocks will be the catch-up stories and the market share gaining stories. In that respect, the performances at this moment seems to be small, but it will be significant toward the end of this year. And the key investment theme of Hyundai Motor and Kia Motors is how fast they can catch the top-tier players like Toyota, Honda, and Volkswagen in the overseas market. In that respect, Hyundai and Kia, they got a very strong momentum. And these are exhibited and proved from their strong sales performances going forward.
And what about pricing for Hyundai? Let me just ask you, Sokje, because I'm looking at the PE ratios for Hyundai. It looks pretty pricey compared to the rest of the market. So why does Hyundai deserve this premium?
Yes, that's right. And in that respect, most of the automakers globally, they are trading at a significant discount to their market. In that respect, Hyundai Motor and Kia Motors, they are actually trading at higher multiple compared with the peers. But we believe that these current multiples do not reflect the real upside potentials of these two stocks. And the real upside is how soon and how fast they can show their performances going forward for the next 2 to 3 years to come.
Okay, and Sokje, I also have to ask about the Korean currency, the won, of course, because that also factors in, especially if you have a big export that makes most of their cash overseas, right? So Sokje, with a lot of people expecting the won to appreciate from here, this pretty much seems to be a consensus call among a lot of currency traders out there. How is that going to impact the bottom line at Korean automakers such as Hyundai, such as Kia?
Right. In that respect, 1% won appreciation can affect their net profit by 2 to 4%. And clearly, won appreciation is negative for their earnings performances. But we need to have a much bigger pictures, which is a competitive or competitive position against the Japanese makers. Key competitors of Hyundai and Kia will be Japanese players like Toyota, Honda, and other Japanese makers. In that respect, Korean won versus the yuan ratio remains very, very favorable to Korean automakers. And historically speaking, we have seen a strong performances of Hyundai and Kia as long as 1 yen ratio remains above 10, and the current ratio is 12.5.
All right, so there's still an advantage there for these Korean automakers. Sokje, let me ask you, if you're so bullish on the won and Korean automakers, why do you just have a hold call on Kia right now?
Okay, Kia Motors, it is hard to judge the company just from the PE or typical multiple because the company has different financial structures compared with Hyundai Motor. That means that Kia Motor, the market cap is about $6.5 billion, but at the same time, the company has about $10 billion worth consolidated debt. And these amount of debts are largely coming from their overseas inventories accumulated for the past several years. But in that respect, I can say that there can be a significant upside of the company if Kia Motor can clear its overseas inventories successfully. And last year, during 2009, the company cleared about $3 billion worth of overseas inventories already. That means the increased position of the shareholders' value equity side.